Welcome back to Investing Talk Podcast. Today we're tackling a question that's likely on many of your minds, especially if you're following market movements closely. Is UPRO a good time to buy now? We've gathered some fascinating source material on ProShares UltraPro S&P 500, and we're going to unpack all the key insights for you. We'll explore UPRO's objectives, how it works, its recent performance, and what might be on the horizon. We'll also definitely cover the crucial risks and the best use cases for this particular instrument. And just before we jump in, if you're finding this exploration valuable, please take a moment to subscribe, like this discussion, and maybe leave a comment below. Oh, and if there's a specific company you'd like us to look into, let us know in the comments. Your input really helps us tailor these discussions just for you. Okay, let's unpack this. When we talk about UPRO, what exactly are we looking at?
Well, what's fascinating here is that UPRO isn't your typical ETF that just holds a basket of stocks directly. Its core objective is to deliver daily investment results before fees and expenses that correspond to 3x, yes, 3x, the daily performance of the S&P 500 index.
3 times the daily performance. That sounds, well, powerful. How does it actually achieve that? It seems complicated.
It is, yeah. It achieves this through a derivative-based index replication strategy, mostly using swaps.
Swaps, okay.
Yeah, so instead of owning all the individual stocks, it holds these swap agreements that reference the S&P 500 index, and it holds those alongside cash or, collateral.
So it's essentially tracking the S&P 500, but with this big multiplier.
Yeah.
What kind of companies are in that underlying index then? Still the same S&P 500 mix?
Exactly. The S&P 500 is capitalization weighted, focusing on large and mid-cap U.S. equities. So UPRO, by design, just mirrors that sector composition. Its exposure is 100% to the United States, and its market cap focus lines up perfectly with the S&P 500 rules.
Gotcha. And when did UPRO actually start trading? How long has it been around?
Its inception date was June 23, 2009, and it's regulated as a 40 Act open-end investment company trading over on NYSE Arca.
Okay, 2009, so it's been around a while. Now, here's where it gets really interesting, I think. UPRO's performance. Our sources show it posted roughly a, plus 26.9% return over the trailing 3 months. That's way above the S&P 500's plus 9.6%. What drove that kind of outperformance?
Right, that's the leverage in action. If we connect this to the bigger picture, the past 3 months had several key drivers. Back in June 2025, UPRO surged right alongside an S&P 500 bull run. The index was hitting fresh record highs, and really critical were those exceptional quarterly results from companies like NVIDIA and some other mega-cap tech names. Plus, you had growing bets on a Federal Reserve rate cut after some dovish economic commentary. That prompted increased institutional rotations into equities.
So a strong market, big tech earnings, and Fed optimism all playing a role. A perfect storm almost. What about July? Did that continue?
Well, July 2025 saw its scheduled quarterly rebalance. That's more of a technical event, really. It can temporarily impact trading volume and price, as they adjust things. Also, we saw strong consumer and labor market numbers, which bolstered sentiment. That supported continued inflows into aggressive U.S. equity ETFs like UPRO. Oh, and the ex-dividend date in late June also led to some repricing. Minor factor, but there.
Okay. And August, just last month. How did things look then?
August brought a bit more market volatility. There was a spike. S&P 500 futures swung around quite a bit ahead of key PCE inflation data and several tech earnings. That created some price whipsaws, definitely. But despite that, higher trading volumes signaled pretty substantial institutional positioning and, speculative trading into S&P 500 leverage. People getting ready for September's macroeconomic reports.
So a really dynamic 3 months, but ending with that impressive plus 26.9% return. Wow. However, I've definitely heard that holding leveraged ETFs like this for longer than just one day can be tricky. Is that right?
This raises a really important question. Yes, absolutely. Over time, significant deviation from that 3x index return occurs. It's due to daily compounding and something called path dependence.
Path dependence.
Yeah. Think about it. The fund rebalances daily to maintain that 3x leverage. So the sequence of up and down days really matters, not just the total return of the index over, say, a week or a month. If the market is choppy, going up one day, down the next, that daily resetting can actually erode your returns compared to a simple 3x calculation over the longer period. So UPRO should absolutely not be expected to deliver 3x the benchmark returns over periods greater than one single day. This is a critical point for understanding its true performance.
That makes sense. It's all about that daily reset.
Yeah.
Crucial to remember. Okay, so looking forward then, what events are on the horizon that could influence UPRO's performance? Our sources highlighted several key dates and potential catalysts.
Yeah, we're looking at a few critical periods coming up. First, S&P 500 Q3 earnings. They kick off around September 27th, 2025, and those key tech results are expected around October 20th, 2025. Earnings season is generally expected to drive sharp moves, and because of UPRO's leverage sensitivity, especially around those mega cap tech names, it could be quite volatile.
Right, leverage cuts both ways. What about technical factors for UPRO itself? Any specific dates there?
Uh-huh. UPRO has its own quarterly ETF rebalancing around October 7th, 2025. Institutional flows and this kind of ETF rebalancing are really crucial technical catalysts. They definitely affect intraday and weekly trading patterns. Also, looking a bit further out, the holiday retail spending report on November 1st, 2025, that might catalyze a broad repricing of consumer-sensitive stocks in the S&P 500.
Interesting. Now, beyond those scheduled events, our sources also mention some, well, rumors and speculative catalysts. What's the market chatter?
Indeed. Speculation is always out there. There's persistent talk about possible new SEC regulations that might target leveraged ETFs that could affect UPRO structure, potentially.
Regulatory risk. Okay.
Yeah. There are also rumors about a major S&P 500 reconstitution, possibly reshuffling large cap tech names affecting sector exposure. Market chatter also suggests hedge funds might accelerate the use of UPRO for synthetic index hedges.
Synthetic index hedges. What does that mean in practice?
Well, it's basically using UPRO as a tool to quickly gain or hedge against broad market exposure in a highly leveraged way without trading all the underlying stocks.
Yeah.
It can be used for short-term tactical bets, maybe even bearish ones sometimes.
Okay, a specialized use case for sophisticated players.
Right. And finally, there's always persistent media coverage about a potential off-cycle Fed emergency rate cut. Unlikely, maybe, but the talk is there. Any of these could trigger massive leveraged inflows or outflows.
Got it. So, with all this activity and potential for big swings, let's talk about the fine print. What are the crucial things to understand about UPRO's structure, its costs, and the risks involved?
This definitely raises an important question about how you approach such an instrument. First off, costs. UPRO has a gross expense ratio of 0.91%. Now, there's a contractual waiver through September 30, 2025, but still. It's important to note this is above most core S&P 500 ETFs. You pay for that leverage.
0.91%. Okay.
Okay.
But what about trading it? Is it easy to get in and out? Is it liquid?
Oh, it's exceptionally liquid. That's a big plus.
Yeah.
The average daily volume is huge, around 4.5 to 5.3 million shares. And the 30-day median bid-ask spread is super tight, just 0.01%. That indicates really efficient trading, minimal slippage.
Very efficient. Okay. But the risks, what are the major risks you'd highlight for someone considering UPRO? We talked about compounding.
Right. The primary risk is, hands down, the leverage and the derivatives risk itself. Losses are magnified 3x daily, period. And crucially, as we hammered home, because of path dependence, holding periods longer than one day are highly unpredictable in terms of expected cumulative returns. It's just not designed for that. Then there's also counterparty risk.
Right. You mentioned the swaps with firms like UBS AG, Goldman Sachs, Societe Generale. What's the actual risk there for an investor?
Well, counterparty risk basically means UPRO depends on these institutions fulfilling their end-of-the-swap agreement. If one of those big banks ran into serious financial trouble, there's a risk, however remote perhaps, that UPRO might not get the full value of the swap or could have trouble with the collateral. It's inherent in using derivatives.
Okay, an underlying risk to be aware of.
Yes. And there's also liquidity risks. Specifically in times of extreme market stress, things can seize up. And of course, it inherently has 3x the volatility of the S&P 500. That's by design.
So amplified gains, amplified losses, and several layers of risk to consider. Our sources compare UPRO to some peers. How does it stack up?
Yeah, UPRO really stands out because of that precise 3x daily S&P 500 target and its high liquidity. Its closest direct competitor is probably SPXL. It also offers 3x daily S&P 500 exposure, but its fees are slightly higher. If you wanted less leverage, maybe 2x, there's SSO. Lower volatility, still leveraged. And then you have inverse options like SDOW, which tracks the Dow Jones, but negatively. So UPRO is really designed for that specific aggressive daily leverage on the S&P 500.
Okay, very specific niche. So after exploring UPRO's mechanics, its recent performance, the catalysts, the crucial risks, let's circle back to our central question. Is UPRO a good time to buy now? What does this all mean for someone looking at this instrument?
Well, what's fascinating here, I think, is the clear distinction between its technical abilities and how it should be practically applied. Our analysis, looking at everything, gives UPRO an overall rating of 5 out of 10.
5 out of 10. Why?
Well, while it delivers exceptionally high liquidity, those tight spreads, and that precise daily 3x S&P 500 exposure, which it does very well. The compounding effects, the path dependence we talked so much about, and those swap counterparty risks mean it's really only suitable for extremely short-term tactical trading.
So definitely not a set it and forget it kind of investment. Not something you'd hold for weeks or months.
Absolutely not. No way. Its tracking over longer horizons is just poor because of that daily reset. It's almost guaranteed to deviate from 3x over time. And there is significant risk of amplified losses, especially in volatile or choppy markets. It can chew up capital fast if the market doesn't go straight up. For most investors, UPRO is strictly a short-term tactical vehicle. It's not suitable for strategic or long-term core portfolio use at all. It's really a specialized satellite position, best for seasoned traders who want that amplified S&P 500 exposure, ideally just intraday, or maybe for a few days for very specific tactical bets.
That's a really crucial distinction, and it absolutely underscores that this information is for research and educational purposes, helping you understand. But it is certainly not investment advice. What an insightful exploration into UPRO. I think the key takeaway for you listening is crystal clear. While UPRO offers really potent leveraged exposure to the S&P 500, that daily reset mechanism makes it a tool for very short-term tactical trading only. It's not a long-term holding. Big difference between daily performance and cumulative returns.
Indeed, and this raises an important question for you to maybe chew on. Given the specific nature of leveraged ETFs and understanding this daily compounding and path dependence, how might that affect your perception of other financial products out there that claim to offer amplified returns or, super rapid gains? It's a concept with pretty broad implications.
That's a great thought to leave everyone with. Thank you for joining us for this in-depth look at UPRO.
Yeah.
We hope you feel much better informed now. We'll be back soon with more fascinating insights.